Happy Monday. Heyo. All right, move that over there so I don't need to look at myself. And there are my notes. All right, welcome you guys. Happy Monday, happy Monday, happy Monday. 4 days left for me and my team until we can put 2019 tax returns behind us. Yay, we are so excited. So excited. As you guys jump in here, let me know where you're from. Just say hey, let me know what you did this weekend. I got to celebrate one of our close friends' birthdays with a few of our friends, so that was fun. We went up to the mountains, had a pool pizza party, so that's something I haven't done since I was, probably 12. So that was good. I'm gonna finish my coffee. Hi, Wendy, y'all. You know me, I usually have my fun mugs. I treated myself to Starbucks this morning. And I didn't get a pumpkin spice latte because I'm not that basic, guys. I got a blonde latte with pumpkin sauce or pumpkin in it. So totally different. Just kidding. I told Travis I am a basic bitch hipster because I was drinking pumpkin spice lattes before they were cool. So yeah. We're going to give everyone just a few minutes to jump on as always. We'll just sit here and shoot the breeze. Wendy's here. There's a few others of you here because I see it. Hello, good morning from, how is California? Y'all are still on fire. I see it every time I watch football and they show the skyscape. Skyscape? That's not a thing. The horizon. It's still pretty smoky here, and I think most of our fires are contained. Wendy will correct me if I'm wrong, but in Colorado, most of our fires are contained. But we're getting a lot of smoke from all the other state fires. There's fires going on in other states, so it's still crazy here. We're having beautiful fall weather. 40s to 50s in the morning, hence the hoodie. But as soon as we're done here, this will come off because it's going to be 73 today. So fall is my favorite. The leaves are finally changing. I got yellow and orange and red outside my window. It's glorious. Open Facebook because I can't see who you are. Good morning from California. But as soon as I open Facebook, I'll be able to. Because StreamYard, you guys in the comments at the very top, there's like a link. And if you give StreamYard permission to use your name, then I can see it in the comments over here. Otherwise, I'll just cheat. Totally cheating. It's Shirley. Good morning, Shirley. Okay. I'm going to go ahead and jump in. Like I said, we got 4 more days in the longest tax season ever, which is 2019 tax returns. We have one final deadline. So I've got a lot of work to do. So let's jump in. First, happy Indigenous Peoples Day. Some of you guys might not be working today if you're in banks and government, but again, if you're in the tax world, you're working. So happy y'all are here. If you don't know me, I'm Bree Beers. I own Bree Beers and Associates. We are a tax firm whose goal is to enlighten taxpayers and business owners on all things accounting and tax. We understand that y'all don't know what you don't know when it comes to business and accounting and taxes and finance. So our team is dedicated to creating all the tools we possibly can to help you shed some light on that unknown. One of those tools is our awesome Facebook community, Money, Tax, and Finance for Small Business. And if you are a business owner and you are not in that group, go over there, please jump on in there. It's an amazing supportive community where we post daily tips and tricks, and then we have our weekly trainings and our weekly updates. While you're there joining my group, can I ask you to do me a solid and join my friend Jamie Charles' group? It is called Financial Literacy for Women Business Owners. There is a link in the comments as well. I'm going to ask you to join at the end as well. You guys, everything I've learned about PPP and EIDL and COVID and serving my community through Facebook communities or Facebook groups and all the things I've learned from Jamie. She is like less than 500 members away from her next member goal. So if you're not already in there, even if you're not a woman, there are lots of guys over there now. Go over there and join her. It's like I said, it's not just because it's so big now, her goal is 30,000. Because it's so big, you actually there is so much support from each other. Jamie will teach and she'll teach some stuff, and then the people that are listening will jump in and help others. And it's awesome. So please go over there and join if you're not already there. All right. So let's jump into today. Today is part 1 of a 3-part series on tax planning. You guys, get your hearts ready. Tax planning is my favorite part of my job. And we'll kind of talk about all of the things today, but tax planning, I'm excited. It's the way that I get to help my clients save money. And for me, it's fun because it's a puzzle. Every client is different. Every client looks different because they have different goals, different income streams, all the things. So tax planning is fun. And I am actually enrolling in a certified tax coach program, like a class. I'm going back to school, guys, so that I have even more tax planning tools and strategies at my disposal to help you guys. So I'm super stoked about that. So today we're going to talk part 1, and it's who benefits from tax planning, and we're going to talk about how it's different than tax preparation. All right, so we're going to start at the beginning. We're just going to talk about what is basic tax preparation. All right, so basic tax prep is what most tax preparers, including H&R Block, Jackson Hewitt, those chains, that's what they provide, okay? And this process looks like this, okay? You, the taxpayer, you collect all your documents from the prior year, right? All your tax documents, your W-2s, your 1099s, your mortgage statements, your childcare, all the things, okay? Then you may or may not get a checklist or an organizer from your tax preparer to help guide you in that process, right? I think most tax preparers do provide this. So hopefully you're getting that to help you just make sure you get everything, right? Then once you have all your tax documents, you're going to give or send or in some other way, deliver your tax documents to your tax preparer. Then your tax professional enters the tax documents, all that information into their tax software, and they provide you with a copy of your completed return, right? You review the return, you sign your e-file signature pages, you pay your invoice, then your tax preparer files your return, you pay your tax bill if you have one, and then you get to avoid taxes for another year, okay? And that is a tax preparation business model. Nothing wrong with it, totally normal. I would have to say probably 70 to 80% of all CPAs, tax professionals, tax advisors, this is what they do. They just prepare tax returns. All right, totally normal business model. So our firm and a lot of good tax preparation, tax advising firms take that tax prep a step further, okay? And so if you're only looking for tax preparation, I would suggest looking for someone who offers these additional pieces to the process as well. So here at Bree Beers and Associates, when we prepare a tax return, we do all the things we just talked about, right? But we also, when we complete your return, we're also looking through your documents. We're looking to see if you missed something. Did you miss did you miss a tax or a tax deduction? If you're in business, did you have an expense last year that you don't have this year? Are you missing one of the main common expenses, right? Did we notice you have children, but you took no childcare? We'll check in with you to see, hey, did you have any childcare expenses? So we are not just data entry. When you go to H&R Block, Jackson Hewitt, those chains, you get data entry, okay? When you go with not a small firm, but an actual tax preparer as opposed to the chain, you're going to get this additional level of looking over your stuff and just making sure they have everything from you that they need, okay? So you get that extra layer of assurance, right? Making sure you're catching everything that you should, making sure you're deducting everything you should, making sure you're not missing anything that's going to get you in trouble, and making sure it's done right? I will never tell anybody here in this group to go to a chain tax preparation place. They are data entry. They don't do a very good job, okay? That's the same way I'm learning about the new Intuit products that they have. Okay. And if your tax picture is too complex, that's probably how I feel about you doing your own return. Okay. You're probably missing things. All right. Maybe you're missing deductions. Maybe you're reporting something wrong. Okay. Maybe you're putting in a different place, raising red flags. Okay. So that's why I always suggest you have a tax professional do it. All right. Back onto what else you should get from a good tax preparation. We're still on tax prep. We haven't even started on tax planning. So with us, we also are going to give you a current year tax projection as well as suggested estimated payments for this year. So if you came to us for 2019 tax prep, you're going to get a 2020 tax projection and estimated tax payment suggestions based on prior year's income. All right. And I want to be clear that you guys, that these tax projections and these estimated tax payments based on last year's figures aren't the same thing as tax planning. These are things that are just included in the tax preparation process. All right, so let's talk, what is tax planning? Okay, tax planning is, year-end tax planning is us looking at your income, looking at your taxable activities for the current year and accomplishing the following goals. All right. We're going to be able to estimate what your tax liability for this year is based on this year's events, this year's income, this year's sales, this year's actual taxable income events. All right. And we will talk about why this is so important. And we're going to dig into this next week in basic tax planning, because this part is basic tax planning 101. Okay. Making sure you know what your tax picture looks like for the year and making sure you've paid in enough so that you don't owe a ton when April 15th comes around. All right. We are going to, in year-end tax planning, we're going to look at extenuating circumstances that maybe you engaged in this year and determining how that affects your tax picture. Maybe you cashed out stocks. Maybe you sold a rental property or a real estate property. Maybe those are the big ones. Maybe you received stock options that you cashed in or out on from your employer. Okay, these one-offs, these things that don't happen year after year, but they happened this year, and you want to know how that's going to affect your tax picture. Okay, that's what tax planning is. And tax planning is us looking at your whole entire picture for 2020 and talking to you about your goals, about how much money you have that you want to invest in certain areas, and recommending tax saving strategies that you can invest in before year end. And that's why it's so important that you do it in the current year, because if you wait till you do your tax return, a lot of those opportunities to invest and save money and put money in different places go away. All right. So those are kind of the steps of tax planning that are involved, or that the levels. Okay. So the question I get a lot of times is, well, who is tax planning ideal for? Who benefits from tax planning? And you guys, I can tell you that honestly, everybody, and I'm not saying everybody needs to do tax planning every single year. Certain people don't. All right. Some people, and we'll talk about that throughout the next 3 weeks. But if you've never done tax planning with a tax professional, you can benefit from tax planning. All right, so let's talk about that, and then we're gonna go into a little detail on how it can benefit different types of taxpayers. And I'm gonna start with my non-business owner friends. Okay, if you're a business owner, still listen, because your business is just one piece of your tax picture, right? For most of us, it's the biggest piece, but it's just one piece, right? You might have a business and W-2 wages. You might have a business and a rental property. You might have a business and investment in, stocks and bonds. Okay. So we're going to talk about not necessarily the non-business owners, but we're going to talk about the non-business activities and how people that have non-business activity can benefit from tax planning. All right. So hold on. Okay. So your non-business owners, and if you have consistent income year after year, but you always owe money with your return, right? So year-end tax planning for you, which when I say year-end tax planning, you guys, we do it as early as November. But year-end tax planning, is going to help you, because what it's going to do is you're going to come in, you're going to talk to us in November. We're going to look at your tax picture for the year, and we're going to say, okay, this is what you're going to expect to owe in taxes this year. All right. This is what your tax liability is going to be. So this allows you to make a tax payment now rather than waiting for April. Okay. Because not only do you likely have the cash now, it just, especially if you have this extra money for, maybe you got a bonus, third quarter, but whatever, it allows you to make that payment when you actually have the cash. You can also avoid some penalties and interest. There are penalties and interest that accrue from paying it in the year, we're talking about 2020, and waiting till April to pay it. They're minimal, okay, but they exist. So coming in for year-end tax planning, just to be like, okay, this is my picture, I always owe money, why? We can sit down and be like, well, this is why, and we can make your tax payment for this year, and then we can adjust your withholding or your, maybe suggest some estimated tax payments. We can talk about ways so that you don't always owe at the end of the year, because that's part of why we put off doing our tax return, right? It's because we don't want to pay. Well, if we pay it this now, then we're not so hesitant to do our tax return when the time comes. All right, and the biggest thing for y'all who don't have business activities, because when you're just a W-2 employee, you guys, if that's your main or your only source of income, okay, your tax savings options are limited. Okay, they are limited. And so we can start the conversation of exploring future tax savings strategies. Okay, so free advice right now. Okay, this is worth its weight in gold, so listen. The largest tax savings opportunities available within the US tax code are for small business owners. All right, which most of you watching right now are, so thumbs up. If you're not, by doing something like starting a side hustle or investing in real estate property, okay, you can expand your tax saving opportunities exponentially. And so I'm not saying come in November and let's create something so you're ready to go January 1st. No, but what we can do, if this is something that interests you, is we sit down for an hour, we talk about you, and if you have a spouse, we talk about your hobbies, your interests, your goals, and we start coming up with a plan to put this thing in motion. Okay, it's not something that's going to happen overnight, especially if you're, I can't think of the word, but if you're hesitant to do this, you're like, no, I am a W-2 employee. This is what I do. That is all I do. I would never start my own business. That's crazy. We can start that conversation and start getting you comfortable with those activities. All right. So those are so that was me talking to y'all, my non-business owners, who don't have who just kind of have the same picture year after year. All right, then there's my taxpayers who don't necessarily have large bills due with their tax return, but you feel like there has to be a way to lower your annual tax burden, right? You're paying enough in withholding. You're paying enough throughout the year, but when you see your tax return and you realize you paid, 32% in taxes, you're like, man, there's got to be a way for me to lower that. There is. And it goes back to what we just talked about. All right, I'm going to give you another kind of example to help you. So if you've ever invested, you've put money aside, your retirement, okay, you've heard of diversifying your portfolio, right? You want to diversify your portfolio, meaning you don't want to put everything all into stocks or all into bonds. You want to put a little here and a little there so that if one thing tanks, you still have money coming in over here, all right? Well, if you're like, yes, I agree with that, that makes sense. Well, why would you not want to diversify your income as well? Okay, meaning find other ways to make money besides your W-2 income. And not only does this open up doors for tax savings like we talked about, but you guys, it provides other benefits as well, right? You get additional income. You're going to have a security blanket. What if you lose your W-2 job and like God forbid, but hello, COVID, things are happening right now. Life is weird. World's weird. What if you lost your main job, but you had this side hustle that you were spending a couple hours on a week that you can now put a little more time into and make a little more money? All right. Usually your side hustle is something fulfilling. It's taking something you enjoy, a hobby or an interest, and monetizing it. All right. So like I said, we suggest starting a side hustle or investing in real estate. Those are the ways to start. But again, something we can talk about. And then for you guys, all, for y'all, we can we examine your current tax picture. We chat with you about your goals and your hobbies and your interests, and we start you down the road to future tax savings. All right. So that when we talk about tax planning and why it's fun, that part is fun for me. All right, because we get to talk to you guys, we get to be a part of your goal setting and your future planning, and it's fun. So my next group of people are my non-business owners or my business owners, but those of you that have extraordinary income activities for this year. So like I mentioned earlier, maybe you sold a real estate property, maybe you liquidated stocks, maybe you received stock options from your employer, but you have these events that happen that have created a taxable event, but you have no idea how, is it ordinary income? Is it capital gains? How much is being taxed? Did I have any money withheld? How much am I going to owe when all is said and done? All right. So those extraordinary events, that's a reason to come in and tax plan with us. All right. So again, you're not stuck on April 15th paying this extraordinary tax bill because you didn't sit with us in November and get an idea of what that was going to look like. All right. So now we're talking to you business owners. All right. So all the three things we just talked about above are for my non-business owners, or they're for my business owners who have other side activities, right? So let's talk to my business owners now. So remember that if you're a business owner, that unless you're a C corporation, your business flows through and intertwines with your personal return. So everything plays together, and nearly everything we just talked about, like I said, for non-business owners is going to apply to you too. So calculating your estimated tax liability, suggesting payments to minimize penalties and interest, exploring additional tax saving strategies, all of that applies to you still. All right. So now my business owners whose income fluctuates year after year, right? You're up, down. It's not normal, which unless you're a pretty established business in very specific industries, you're going to have fluctuation in your income. And then you're also going to have fluctuation in your spending, right? You might always make the same amount of money, revenue, but some years you might be, you might hire people or fire people. You might invest in softwares and research and development, or you might not. So your income and your expenses affect your taxable income, and that's going to fluctuate. All right, so you want to know, you come to us, or you go to a tax planner. It doesn't have to be us. It should be us because we're good, but you can go to whoever you want. But you tax plan because you want to look at how your current year's business activity is going to affect your personal tax liability for the year. All right, so for our business owners, in November, we take your P&L, your financial statements, your balance sheet, your profit loss. We, for year to date, then we ask you, what does the rest of your year look like? And we come up with some projected financial statements. And then we say, okay, we throw that into your individual return. And we say, okay, this is what you're looking like. This is what your tax liability is looking like for the year. All right. And sometimes that's all people want. Again, that's all they want. They just want to know what they owe. All right. But then we have those of you out there that are like, okay, I have a chunk of money left at the end of the year that I want to invest. How can I invest this either into myself or back into my business and lower that tax liability? Okay, that's where we are worth, your return on investment when you do that kind of tax planning with us, you guys, it's at least tenfold. Okay, and I'm not joking. Like when you have the capacity to be like, okay, tell me how to invest this money that I have before you're in to save me tax money, we're going to be able to be like, here's 8 different scenarios that you can do, and you can mix and match them. You can do a little of this, a little of that, depending on your goals. And it's fun. And you're going to see, you get a report that shows you exactly what you're saving and what you're getting back. Okay. By investing this little bit of your time and your money into some tax strategizing. All right. So business owners whose business income fluctuates year over year, you're going to benefit from tax planning. Business owners who have never worked with a tax strategist. All right. If you may be a seasoned business owner whose income is pretty much the same every year, whose expenses are pretty much the same every year. But if you have never worked with a tax strategist, there is a very good chance, like I would bet money on it, that you are leaving money on the table with missed deductions, missed credits, different types of elections, all the things. All right. So here's some, again, more free tax advice. Here's some of the easiest tax saving strategies for established businesses. So you might be an LLC who might benefit from becoming an S Corp. We would talk about that. Okay, you might not be maximizing your retirement contributions from both the business and the personal sides. If you own a business and you have working age children, you should be employing them in your business and taking a business deduction and saving, some money for them. R&D credits. That's something. R&D credits are an area where people they think if you're not like in computers and sciences and stuff, you can't get them. Not true. Okay, so those are 4 of our top / easiest tax saving strategies that we would discuss with our business owners to figure out if any of these will help you guys save some tax dollars. Other people, okay, business owners whose business had extenuating activities in the year. Same as we talked about on the individual level, right? Maybe your business sold a building, right? Maybe you're in real estate and you sold a building. Maybe you took on a new partner. Maybe you want to offer stock options to your employees. So many different things. All right. Again, those who have extra cash that they want to reinvest back into their business or into themselves, those are going to be that's going to be the group that benefits the most from tax strategizing. And then business owners or investors of multiple entities. Oh my gosh, you guys, if you have more than one business, okay, there should not be a year that goes by that you don't talk to your tax strategist or tax advisor, okay? Because there's so many ways to help you save money there, okay? Comments are flowing in. Joy says, wow, the only tax planning my CPA does is calculate estimated quarterly tax payments every year. I definitely need your tax planning service. Yes, and that's the thing, Joyce, is that's not tax planning. That's just, and it shouldn't be, because, okay, think about this. So when I prepare a tax return, okay, I'm doing reactive work, right? I'm looking, like right now, the tax return I'm working on today, it is October 12th of 2020, and I'm looking back at this client's 2019 tax return, right? I'm doing reactive work. I'm looking back at their tax return, I'm looking at their income, I'm looking at and I'm saying, okay, it's basically a reconciliation, right? A tax preparation is a reconciliation of the last year's activities, all right? And then most tax preparers, I think even H&R Block maybe does this, they're going to give you estimated tax payment suggestions and a tax projection for this year. Okay, and that's great. That's a great starting point. That's a great thing to utilize if you don't have a lot of fluctuation, if you don't have a lot of, if you're not growing or expanding, okay, and it's a good starting point, okay? Because those estimated tax payments, okay, what that's saying is if 2020, if your income, your expenses, all of your tax picture for 2020 looks exactly like 2019, then these estimated tax payments are enough for you to cover your tax liability for the year, okay? So those estimated tax payments they are just keeping you from having that huge bill come April 15th and avoiding late penalties, underpayment penalties, the such, okay? So it is a great tool, okay? It is a great service that is, it's not even a service, it's a great piece of your tax preparation, but I do not want you guys to confuse those tax projections and those tax estimates with tax planning, all right? Because it's not, all right? It's not a thing. Jess says, so happy with our decision to use your services for our taxes this year. Thank you for being awesome. Oh, Jess, you make my heart happy. Wendy says, I think we need a tax planning session. Yes, Tangi says, good morning. So everybody's here. It's great. My favorite people are here. Yes. So that's, when all is said and done, that's what we're coming back around to, you guys, okay? Is 2020 tax planning season is coming up. We're going to start it in November. Be on the lookout on our newsletter, on our weekly emails, because we've started dripping information. I didn't want to overload you guys with things. So every week there's a little bit more about our tax planning packages. This week, assuming I keep finalizing them, and then I'm like, oh wait, add this. Oh wait, change this. So assuming I'm actually done, you guys will actually see our multiple options for tax planning packages in this week's newsletter. So I'm pretty excited about that. And so I don't know where I was going with that. Oh yes, so every week in October newsletters, you're going to get a little bit more information about tax planning, and that's what this series is about too, right? To educate you guys on what tax planning, what tax strategizing actually is, so you know if it's something that you would benefit from. And then November and the first couple weeks of December, it's go time. All right, we are going to be busting out tax plans like it's, I don't know, like it's going out of style. It's going to be fun. So yeah, pretty excited about that. So let me make sure I said everything I want to do about 2020 tax planning. You'll get it next month. Oh yeah, and then you'll get the tax planning packages. All right, few end reminders, you guys, just at my end announcements, because we're done. If you guys have questions, let me know in the comments. Remember, this was part 1 of a 3-part series. Today was all about who could benefit, right? Next week, we're going to talk about basic tax planning. We have basic individual and basic business tax planning. So we're going to talk about what's involved in basic tax planning. And then in 2 weeks, we're going to talk about advanced tax planning. All right. And this is just to give you guys the ammo you need to understand what services you really, you need, what you're actually looking for from us, or whoever you go with. But let's be honest, you should all be using me because my team is awesome. Joyce says, due to COVID, I was closed for 2 months and didn't get to full capacity until October 1st. Wouldn't my last quarterly payment for the year be less? Should I still pay full quarterly amounts just in case? If you want to be conservative, you can always pay your full amount. All right. Because keep in mind, you guys, if you overpay during the year, you get that back when you file your return. Okay. It's not lost money. All right. So if you overpay in withholding or through estimated payments, again, your tax return is a reconciliation, right? It's reconciling what income you should actually be taxed on, how much tax you actually paid in through the year, and what your total tax liability is. Okay. Total tax liability versus what was actually paid in is where your refund or balance due at tax time comes from. Okay, it's a reconciliation of those numbers. So if you want to be conservative, go ahead and pay it. But Joyce, you were closed for 2 months. I would say that you could probably pay only 2 months. Hold on, 2 months and didn't get to full capacity until October 1st. I would say you could cut. Quarterly payments are usually based on 30 months, not really, but close, right? So I would say you could pay 1/3 of your estimated payment if your other ones have been made, and you should be good. Again, that's not, without looking at your exact numbers. Tax planning, we can give you exact numbers and figure out exactly what that number should be, but just speaking generally, I'd say you can definitely pay less. All right, I'm over my time. Last few reminders, remember PPP, EIDL. If you're out there and you borrowed money and you need help, we have personalized PPP strategy sessions, and we have the full service PPP forgiveness application completion services, which I'm not going to come up with a better name because I keep calling it that. If you're interested in either of those services, there's a link in the comments to schedule an appointment with us. And then, y'all, there will not be an updates and Q&A session this week because Thursday is indeed October 15th. It is a deadline. I hope to, hopefully by 2 o'clock by the time we're done and I'm drinking, but odds are I'll still be working. So regardless, I love y'all, but give me a day, okay? If something important happens this week, I'll come in on Friday and I'll update you guys. But I think we're kind of still at a stalemate, so I don't think you guys are going to miss anything. And then, and one last, if you guys jumped in late, if you are not a member of Jamie Troll's Facebook group, Financial Literacy for Women Business Owners, when I'm done here, please go over there and join. She is the most, if you like me, you're going to love her because I show up, like twice a week and post occasion, she like her Facebook community is her baby, and she is in there. She's amazing. So join that group. She is try to hit another threshold, and if we hit it by this Friday, she's going to give away free stuff and swag and all sorts of neat things. So go over there and join. Again, the link is in the comments. And otherwise, I will see you guys a week from today, Monday, for part 2 of our tax planning series. And we're going to talk about, again, benefits of basic tax planning. So y'all have a great week. If you have extra happy vibes and thoughts, go ahead and send them to me and my team for this last 4-day push. And I will see you guys on Monday. All right. Have a good one, ladies. Maybe guys, but I think only ladies today. Bye.